Good morning, everybody. Hope you guys are doing well. Got the daily bias posted. We have buy set up here. I'm looking for 932, create a new high, but watch the SMT between here and ES. Be able to make that higher high. I'm going to put an alarm up here, actually. We did take out on the hourly and 15-minute charts. Took out some buys of liquidity from, I think it was Monday's price action. Yeah, over here. So if we wanted to go from buy side down to discount, you got to measure from your London low up to the 8:30 or the 9 o'clock high, and you have a range over here in discount, since it's a larger gap. So you'd be targeting the discount end of this larger imbalance, not just the premium end. Do you have new week opening gap layered on top of that too? Since we had a Thursday reversal for the weekly market maker model, which is pretty obviously a market maker buy model, when you have a late reversal, meaning not a Monday or a Tuesday, normally you want to see Friday close near its high. So I don't know if that means that we're going to continue. We're going to have large expansion day into PM session. We could get a retracement here and then continue into PM. But on the weekly candle, you do want to see it close further up near its close, right? So if you go to the weekly chart, let me see if I can pull an example really quickly. Something like this larger candle expanding and closing near its low. You normally don't want to see a TGIF kind of setup on a week like this. We are trading within the weekly imbalance too. That buy side liquidity pool is also lines up with a daily sibi. Further up would be the volume balance plus the order block. So I would find it likely that we trade a little bit further into here, but we still need to just play it by how it's given. So I'm not going to force anything yet. Still watching the SMT there. I would prefer, now we had 8:30 news, obviously with NFP today. You can find an entry between now and 10, but still kind of favoring the ATM model setup, waiting for the first 15-minute candle to print, unless it's clearly obvious why I'm also taking out their new high. I'm curious to see how this or value gap here is traded into. Got this down closing order block range. ES still is not taking out their high. Watch this as a potential breaker. We got 10 a.m. news too. Think so, right? Yeah. Now, sometimes what you can see is one of the news drivers being manipulation, the other one being distribution in this case. With this SMT present, we had pretty clear consolidation. So A, M, and then hopefully D down to discount or even London low. I would find it pretty weird if we took out London low though. Midnight started here and we dropped basically starting at midnight. So that's your very standard London protraction profile. Sometimes we can start at 2 o'clock too. But no gaps have formed yet. Let me actually mark this out really quickly. So that's where you'd be targeting discount. Approximately 17,853.75. So ERL to IRL. Actually, you know what? I'm going to leave. There we go. By the way, that market maker buy model was completed yesterday too. I saw a couple people got in long there. Good stuff. It definitely took a while, all the way up to like 1:30 till we took an AM high, but you can see the turtle soup there. Trades in the bisi with the order block all holding, and then it ran up and took it at 11 o'clock. So this is what you can get sometimes with the 8:30 news, right? We end our first trend around 10 o'clock. This is a kappa setup, I guess, and then take it into lunch. Anyways, we've not closed through this breaker. Still holding the order block here. We also have SMT here at the lows. So since it's not an obvious trade setup, just gotta stay patient. Ruda, it depends. Half the range is what we target when it's huge gaps. It depends on what is in premium or discount. If we're taking out buy side, then we're going to target the discount end of this. If there's a larger gap on every single time frame, then yeah, you can. Sometimes you have to drop down to a lower time frame, and you'll see multiple gaps form. In this case, the gap is pretty large, all the way from the 15-minute chart. So you can split this in half, only if you're targeting this part. But normally, yeah, you don't want to see it trade into this and then trade off unless you're bullish, right? Then you just use a standard price action tape reading tools. Like you could see this as second stage of distribution up to here, but depending on how we react to this buy side is what I'm interested in. But we're still in this accumulation range. And the YM is definitely more bearish. Look at the 5-minute over here too, right? Wicks it and closes all the way down below that buy side liquidity pool. So watch to see how these gaps are then used as inversion. We've not closed below this breaker too. So it's just kind of premature. He's always looking bullish for the most part. But you've got to watch how we react to the premium end of the DXY sibi. Super tiny imbalance in there. Now, depending on which SMT holds, if the bearish SMT at the highs holds on ES, you'll see NASDAQ quickly catch up normally. Sometimes it can be with the news. If we're lagging behind on news, then the news driver on NASDAQ will be a little bit further, more volatile than it will be on ES. Holding last stop closing candle. Now from even up to this range down to the premium end of the 1-minute gap, that itself is 60 points. So on NFP and CPI days especially, you're going to have these larger ranges even when you're expected to be smaller. So you got to measure them out accordingly and be careful with your stop loss and position sizes. Actually going to watch ES for now. Give this SMT too. Four minutes till the 15-minute candle closes. Now with Euro USD looking bullish, we have a sell side of the curve building up here. This sometimes can be not a SMT or indicator or anything like that, but since this is inversely correlated to DXY, you can kind of use it as positive correlation to NASDAQ, but most times it's unreliable. Just the directional bias. if it's really, really difficult on the indices. But even then, it's probably low probability, or you want to just wait. Turtle about to die. Here's a good idea. There goes the turtle. So you can look for this buy side up at 17,988.25. Although ES is a little bit slower, but we're trading through this gap through the inversion now. It's okay, no, stop. Can't lose money if you never get stopped out. We'll just wait next 2 minutes. I will most likely have the market maker model video out by, I want to say Monday, Sunday or Monday. Started running up the script for it. It's going to be a long one, probably 1 to 2 hours. It depends on how much information I can pack in there. I was going to do 2 parts, but I don't feel like doing that. I'm just going to make it one video and edit it. It depends though if I'm going to record it or we're just going to do it as a live stream, as like a backtesting stream, and then record that and then upload it. Problem is that if it's a backtesting / Q&A stream, then we probably won't talk about anything else besides the market maker models and the full, like a larger framework for the morning trades. So we'll probably take a poll today. I'll be gone from today at like 5 p.m. till Saturday night. So we won't be able to do a stream between then. I'll be out of the state. So we can do it maybe Sunday midday or Sunday night, either one. So now with the time-based stuff, we've got a low put in here at 8:30 that probably won't be taken. That's why I had that annotation marked out right there. As soon as we started stream, that 9:30 is going to climb because we took out this 9:36 high already. So you can see either 9:30 create the high or by 10 o'clock. Now with the SMT here, you have what, like 10 seconds left. So bullish SMT at the lows between ES and NASDAQ. Now preferably we can see this 5-minute, there's your bullish buy side being reached. I'm actually going to the daily chart. We're going to mark out that daily imbalance, 50%. It's pretty large IRL. I'm actually going to, now with these larger gaps on higher time frames, if you take your fib and you want to drop fourths, so split it into quarters, it's not a bad idea because each quarter will see different reactions. You can extend these lines right to, there's your quarters. Oops. This gap here should be in discount of the short-term daily range. Yep. That should be a good entry. I want to see YM climb again. Yes, we'll take out their high. Next 2 candles. And then you have a bullish breaker there. I don't know if you saw it. Let's go back. Low, high, lower, low. Last up closing candle range pretty consecutively. See it bullishly on there. So we don't have to drop into discount if we see a entry long. Now on NASDAQ, it's not a clear breaker. We have this tiny 1 minute gap. But to be honest, I'm not liking it too much. The fact that we're already trading into the daily imbalance, we don't know how far it's going to go up into here. If you want to assume it's going to climb all the way to the order block, that's also decently far. Or this 5 imbalance up here with the new week opening gap. Then you could see this probably as a quarterly shift. We're going to go back for the highs because we had SMT present. But whenever we're trading into a larger IRL, even an ERL to IRL, and it's a large hourly IRL or 15-minute IRL, it's always going to be more difficult because you don't know how far it's going to go and you don't know what the exact target is going to be. That's why you can either use standard deviations, like you can pull from here maybe, and find your target that way. Or you have to just refine it down on multiple time frames, finding different gaps, things like that. If you go to the hourly chart, it's still just a large gap. There's no swing point in there. 15-minute chart, we can go back in further. Still nothing, right? Like maybe that swing high, but that's outside the gap anyways. So personally, I don't like these kind of trades either. TJG. And with the news driver too, like it very well could just expand. I want to see it consolidate, drop into this gap maybe, and then expand, but the close above the high, it was okay to pull the trigger. All done for today. Nice. Yep, we'll see you next week. Probably on Tuesday. I'm watching this bullish order block down here too on the 5-minute. But for myself personally, I can tell that I'm more reacting to price and watching how we react more than predicting. Right? Like normally by now you'll have a target, you'll have a clear draw, you have order blocks and everything that you want to see hold as we form a market maker model. In this case, it's like we could drop into here, trade off. I'm actually more concerned with this 5-minute gap too. If we print, which we should, in the 5-minute order block. So if you can trade into this gap, I would prefer that. But ATM model for the most part is already provided if you want to go long. Your stop on this. The problem with this kind of entry, it's in premium and there's no order block next to it. And there's no breaker. So this kind of entry I actually don't like. I would prefer the 5-minute gap. This one down here. I'm gonna mark it out. So how do you determine if it'll break out and continue up or reverse? What are you looking for to determine whether or not to commit to the bullish or bearish trade? To be honest, if we hold this 5-minute gap with the down closing candle range, like if we were to tap into the premium end there and hold it, and it would be in discount of the dealing range, which would be in here. We start to trade off, we form an order block, tap that and start to trade up, then I would look to go long. For us to be bearish, it would be pretty difficult to argue that. We would have to basically close all the way through this candle, this 1-minute order block, aggressively, which the only thing we could probably do that by is from the news. First 3 candles at 9:30 would be your Judas technically. Yeah, right here, this drop down. There's the gap fill. No, I don't like that long at all. Yes, it does make a little bit more sense, but there's no gap on top of it. There's just volume bounce there with the breaker. But this is why managing expectations is good. We had 8:30 news, NFP. We're looking for our high probability kind of setup. But if it's not given, you can't force anything. Your expectation should not be every day we take a trade or even every week we take a trade. You're looking preferably every week to take 0 to 3, not 1 to 3, right? Don't frame your trade setup on I'm going to find at least one setup. If nothing is given to you on a day or on a week, you have nothing to take. So don't make false expectations and then try and hold to those expectations that you've held on yourself. And then you have poor executions. It's better to not even push the button than to take a loss. Will we not be able to tap the gap in discount? No, I don't think there's a reason we couldn't. We could get something like we did on Wednesday, where it spikes down with the news and then trades back up. Now, for us to continue long and basically trade through this as a high resistance kind of move, something like this, or just a lot of retracements all the way up to the premium end, maybe into the order block all the way up here. I would need to see it form a new high at 10, take out that high outside of 10:04, and then you could trust that between 10:30 and 11 will create a new high. On average, how many trades a day and a week do you take? On average, I'll take maybe, I want to say 3 trades a week, about. It really depends on the price action, but I would say 3, maybe 4 a week. Probably around 3. And then max would be 1 to 2 per day. The second trade for me would just be either mitigating drawdown, or if my bias was completely wrong, it's going to be half size. But yeah, I don't like taking more than 1 trade a day. It's either I get it or I don't get it. But you've seen how many times this kind of setup plays out. 18L53 is a POI for me, 50% of the daily fair value gap and high of the weekly fair value gap in the same place. See what happens there. Right up here, yeah. And we have the 2 to 2.5 range in here too. I would actually prefer if we measured from here. That's pretty far. Which I guess we could see, right? We want to see continuation on Friday. Yeah, no shot. I had only 1 trade this week at Tuesday, so we'll see if I take 1 today or close the week with 40 points from Tuesday. Still solid week though. That's good discipline as well. If you're sticking to that bias. I think the less trades you can take per week is more impressive than if you take 40 trades and come out with the same result or even a better result. Like less is more in trading, especially with ICT. Less concepts typically is more. You don't got to learn everything. Less trades, less time frames, everything. DJ mode all day, every day. Do you only trade around 9:30 and 10:30? Do you trade any other times? Yeah, most of my entries are consolidated around 9:30 to 10 o'clock. That's why I prefer to enter. Actually, 9:30 to 10:10. Sometimes holding till 10:30, but I normally don't like entering outside of the macro time. Sometimes before that, like you saw yesterday, but other than that, not really. We do have an order block range in here on the 2-minute. Low probability with the wicks on either side. But I would find it odd if the news just spikes lower. We may just see a retracement quickly. Be happy with 1 to 2 good ones a week, preferably one. Yeah, I mean, you can plan that just on the economic calendar too. Like if you know I'm looking for 8:30 news, I know my entry is going to be there between 9:30 and 10, and I can either hold for 50 points or even further based on time. It's definitely possible. Like the economic calendar basically tells you where you're going to find setups and at what time. If you study it and if you study the time PDF. Can you elaborate on low probability order blocks? Yeah, so low probability ones that I would look at is anything that has large wicks and small candle bodies. So you can look on like this kind of range in here, pretty low probability. If we have a gap next to an order block, typically it's higher probability. Or if we fill a gap and form an order block, that's high probability. Anything outside of that in consolidation ranges, I'm not interested. Something like this where there's no gap present. We haven't really closed above it. Order blocks are hard in the beginning to spot and like pick which ones to use because I feel like it's very subjective when you're learning it. It just feels like, oh, he's pulling a random line from a random down closing candle, which is what I thought when I saw ICT pull it from the 2022 mentorship. Like he would just randomly draw an order block from whatever range he wanted to. And I was like, well, I'm never going to use order blocks because it's just too confusing. Then probably around, I want to say September or October of last year, I started getting into order blocks more, and reading order flow with order blocks is so much more helpful than if you just use fair value gaps. So if you're comfortable with where you are in price and you feel like, oh, I'm missing one thing, if you don't know a whole lot about order blocks, just learn the simple basic ones like breakers, and just standard expansion order blocks. So which order blocks are going to hold as we're expanding price. Those ones are good to learn. Mitigations, rejections are not present most days for a setup, so you don't have to be too worried about those. But mitigation blocks technically are the strongest PD arrays in the matrix. So these are 10 a.m. news spiking up as expected. That was such a quick release that we could see that as a Judas swing. You take that small gap, Ruda. Nice. So now we're dropping into discount here, into the gap. I want to see it actually tap the 5-minute order block. Let's take a look on ES though. ES is starting to trade through. Discount for value gap there. Got in at the breaker for value gap and instantly hit TP. Nice. What was a TP? Just a profit zone? Or like 40 points? 20 points? Yeah, CISD is also extremely, extremely useful when you're reading order flow. It is super, super useful. It's like a small breaker. And if you can learn that, after your turtle soup, your CISD is normally your first indication of a reversal, then a breaker confirmation, then a market structure shift. So if you're just are familiar and comfortable with market structure shifts, those happen. They're good because normally you have everything in place, where then you're confident now the market structure has shifted and you can find an entry long or short, whatever it may be. But if you want to find an early entry, like a very, very low risk entry, even before we have a market structure shift, which sometimes we don't have one, then you're going to be using order block theory. Watch this last down closing candle. ES is dropping way into discount there. Watch this inversion gap here. Now, time-based stuff, we've got a low put in at 8:30, high put in now at 10 o'clock exactly. I would actually like to see if there was SMT yet. Oh, there is. Nice. That's actually pretty helpful. So watch the SMT there at 10 o'clock. Screenshot this quickly. This gap up here too. Look at that sibi. I'm liking shorts more than long. I want to see how we react to this fair value gap with the order block. But I mean, as a target too, you could be targeting the 844 low because we had the SMT there. So sell side at the 844 low. Also all this consolidation too, right? Now this 5-minute candle preferably has to close all the way through this bisi. But SMT at the highs, let's look at DXY really quickly. DXY, as long as we're trading up here, we're taking out this high. I'm going to put an alarm up here. But DXY trading up, good sign for bearish movement too. So look for this sell side. Obviously, we had the gap 50% too. I deleted that, I guess. Down into there. I mean, technically, the dealing range is all the way here now. So discount lines up pretty well with that sell side. I wanted to close through that AM low because we had SMT there. DXY popping up. Good sign to go short. Title revived. All right, so there's your 5-minute candle closing through the gap, right? And through 50%. I think we closed 50% of that mean threshold. Yeah. So close past mean threshold, this down closing candle range, these two candles. Preferably you want to see this used as inversion as well. And we now have a bearish order block here. Now, in this case, we don't have any gap forming on top, like next to it, but we filled a gap. So you'd like to see this hold. I prefer if we don't get a deep retracement into this gap. But that's like a worst case scenario. We come all the way up, fill it, and then come back down. I want to see just hold market maker sell model there. Can cycle time frames to look for a sibi. 3-minute gap there. So we can allow for it to trade in that 3-minute gap too. There's the 3-minute sibi fill. Now the breaker is all the way over here. Quite a decent range up. That's why if it wants to come up and fill this, you have to allow it to. And if you're looking short, stop probably be above there. In general, when looking at DXY, do you think that DXY moves in the inverse direction at the same time, or the indices move in this, or before the indices move in their directions? So if you want bearish movement in indices, no. DXY and the indices will move at the same time. So you can't really use one to predict the other. If one is moving substantially in the other direction before the other ones, then you look at that as SMT, or you look at that as, I like to think it as basically just like pent up pressure. So if DXY is trading aggressively lower and the indices are slowly just kind of moving up, you're either going to wait for a news driver, or if then DXY flips and starts trading bullishly, you'll see the indices drop off super aggressively, because if they're not in correlation, normally that means that there's going to be a larger move happening, especially if one is in consolidation and the other one is moving. So we've got a nice reaction off that 3-minute sibi, starting to trade lower. Now this right here, as we close through that, I would assume confirms the market maker sell model. Now AM low, nice target, and then obviously that sell side, that sell side. Order block there holding, right? Candle buys closing within that order block range. The 3-minute sibi being wicked into. That's your institutional order flow entry drill. Fancy word for it just wicked it and is not moving away. I would actually prefer if it trades into this gap, but we don't need to see it because the discount line now is from here to up here, and discount's like right in there, which should line up with the 5-minute and the 15-minute imbalance. So first partial opportunity given, about to be given. Now look how we don't have a lot of imbalances on this left side. There's not tons of imbalances, just a lot of wicks, which technically are imbalances, right? But if you disregard the wicks, there's no bisis or sibis that price, you would assume, needs to slow down as like a speed bump, right? Tiny 1-minute for value up there. Make sure ES is dropping off too. There you go. So this is where you could split this gap in half if you wanted to. 5102, 5128.5. Can't speak. New week opening gap being traded into on ES, so be careful here. Tiny gap there, inversion, order block range too. So preferably it doesn't take out this high. I want to see that used as basically an intermediate term swing high. Especially if this next candle prints lower and we have a swing high here, intermediate term high with a short term high to the right of it and a long term high to the left. Typically it's a pretty weak structure. In general, when looking at DXY, so if there's no fair value gaps, then price should blast through that easier. Yeah, I have a whole video on that. It's how to read, how to read FEGs, and there's another one called how to read inversion gaps. Both are which, obviously I'm biased, but I think they're solid in reading gaps, and people don't really talk about it. Inversion gaps are really, really important when you're reading price. And if you can anticipate when order blocks will form within those ranges, a lot of times they'll hold like this, right? We have a order block formed within the inversion gap. So they're trading down. this is normally a high probability order block, and you can go back and look at how many times we form inversion gaps and then an order block range that's placed on top of it, like a down closing candle range in this case, order block here, or sorry, for value gap there with an order block range placed. Normally, as price closes above it, it's going to hold. The examples in the video are really, really good. One and done, 25 points. Nice. Yeah, you as well. We'll see you on Monday or Tuesday. Still dropping off here. I want to see these next couple candles. So there's your swing high formed to the to the right of the intermediate term swing high. So stop placement there would make sense to me. No, I don't actually want to see it continuously wick in this range. If we take out the AM session low and don't form a candle body below it, I would be a little hesitant in it continuing. I want to see it just climb and close aggressively through it. So watch where this candle closes now. Don't want to see it just wick. So another partial opportunity given there. See, I was just wicking it, coming back now. 30 points and done. Nice. Patience pays, right? Wait for the setup, forms, execute on it, and just trust that the model will hold. And if it doesn't, that's why you have a stop. But having confidence in the system, so we closed there. I'm not super interested. Let's see. I've got my finger over the trigger here. That order block range to the left of it, this one. I want to see hold price lower. That should be a propulsion block. We've got multiple order boxes tapped into and we've now closed below it. I don't want to see being threshold of that order block really hit in this case. No gap in here too. But it's being high resistance in this area in price, like all in here. It should not be high resistance, especially since there's no inefficiencies. On a time scale, we have 10:15. I mean, you could hold it maybe till 10:30, but we'll just trust the process here. I still think it's going to reach the sell side. We have the 1 minute gap, but it's as the draw on liquidity. And we're holding that order block. GG's 1% made it on difficult week, can't complain. Exactly. Yeah, CPI, NFP, all that kind of rough price action still made 1%. Good work. Honestly, can't thank you enough for your teaching. I've been here 1 week from 500 drawdown. You're funded well into profit. Nice. And hopefully it teaches you something about discipline and patience, right? Like all these setups were either anticipated beforehand or we patiently waited till we got exactly what we wanted and then executed on it. By the way, look at that propulsion block holding 50% there. It's still just ticking me off that we're slowing down. I wanted to see it run through. Would you move your stop in this case? Yeah, I would probably place it here at the 1010 high. That's where I have mine right now. I'm still just waiting to see. I really want that sell side. But if it keeps giving me a reaction off to these lows, I'm gonna close it out. But it's still holding bearish order blocks, so that's the more important part. No, I didn't enter in the top. I entered in basically as soon as we broke down and closed through this inversion gap. Definitely a poor entry. Let's take a look at ES really quickly. Yes, we have this order block range too. This inversion gap is pulled from the 5-minute. So that's why it's not present on the 1. Yeah. One and done. Nice. Is there a 2-minute gap we're filling here? Nothing really. We have 5-minute order block that should hold price now. It's all about patience. Just passed an Apex 25K account using 1 micro this week. Jeez. Good work. ATM models like that, right? ERL to IRL, patience, everything lining up. Enter and hold for time. Oh, I guess we do have a VI up here. Tiny, tiny one. DXY is still popping up here. I don't know why we're slowing down. We've been aggressively climbing these past 1, 2, 3, 4, 20 minutes. And indices NASDAQ is slowing down. Oh, Richard, that was just 2 videos I have on my YouTube channel regarding how to read fair value gaps and how to read inversion gaps. I'm obviously biased when I say that. I think they're solid, but if you want to get better at reading the gaps just from your basic, oh, it's a fair value gap, or oh, it's an inversion, you want to learn the intricacies of what happens in between those 2 lines, that video is solid. Yeah, price action is waiting for me to end stream, then it's gonna sell off right to my target. That's why I'm not letting it happen. I'm either getting stopped or it's coming right home down to 844 low. I mean, look at DXY. It's climbing so aggressively here. YM is the only one that's kind of following through. And like I said, there's no inefficiencies over here, so I don't know why we're slowing down so much. Besides the fact that new week opening gap was on top of that range. But it may be also waiting for time. Look how close we're getting to 1030. It'll probably run to this gap closer and closer to 1030. Let me screenshot this quickly. Put it in predictions. I've been trading for almost 2 years, been in many mentorships, followed many models. Nothing was working for me. I've only been here a week and I'm actually able to read the markets properly. Psychology is developing and I'm not panicking as much as I used to. That's great. That's like exactly what I want to hear. Now it's finally coming. No. Don't do it. Oh, you got to be kidding me. Is that literally the same tick? Been waiting so long. Fantastic. This is what happens when you're too precise. It is a little weird how Thursday had the best price action, right? In between NFP and CPI, or FOMC. Still the best. I swear. What DXY doing? We're still trading up. Yeah, definitely random price action. All that selling pressure came in. Still waiting on time. We're getting closer and closer to 10:30. Chinese whales sold. EMA cross triple top. Everything's pointing bearish. Let's pull up the RSI too. We're holding that bearish order block decently well. It's just such a high resistance move when all I had to do is just trade through it quickly. This is the first time all week it's just been so like uncomfortable to be in a position. Yeah, support. All right, swing high form there. All right, I'm just gonna close out there because it's being extremely annoying. Watch it run out for the low, but my nerves are not allowing me for it to tick, wick the PA or wick the. Oh, I'm glad I closed now. Wick that take profit, and then not even get filled. Also, in the execution, kind of a poor entry, but more on a thesis than an entry pattern. So I'll post that into futures trades. I'm glad I closed down now. Would have taken my stop. Damn, was that uncomfortable though. 52 points, nice. You know, you know how the price action normally works though. It's gonna, you know, your standard. It leaves it, comes by a tick, and then it'll run it out. But either way, I'm fine with taking the profit there. Here it comes. Change of character happening inside supply zone. There it comes. But to be honest, with how many, like I don't think on the 15-minute chart we're trading to the gap. That's why. Here it comes. Why ES just took out their new low. So most likely Y or NQ will follow through. Now I placed my stop like right here. I had at this high and then dropped it down. So this would have stopped me out. Came back and take profit. I would have been more mad about that than pulling it off. But there's your sell side target. Done and dusted. Randomly. My heart, man. Wasn't even using like large position size. Same position size. Just, man. And has anyone seen that there was some video of all these Chinese guys in a room and they all clicked sell and the thing just went down. It was like something about whales. But I saw it on my Twitter feed and I was like, I should have saved that. No, you guys saw it. Okay. I'm not the only one. No, it definitely was a joke. There's no way. I mean, it's not real. I don't know what they were doing unless it was like some meme coin. Anyways, this is also why it's good to not trail your stop too tight. But you gotta. It's personal preference. I mean, you can take a look at the RSI right now too. I'm sure it's just now giving a signal as wants to go short. Oh. We're in an oversold condition. Oh, man. I didn't think about that one. For sure, yesterday I took off the trade at 5-minute IRL before profit 2 tick before BSL reversed and dropped again to discount before taking buy side. Yeah. I mean, this rarely happens where it'll tick it literally to the exact point and not fill it. Like, think about it, if it dropped by 1 tick, it would have filled. So I normally just keep it at the levels, and I don't like to push it up through there because 9 times out of 10 you'll get it run through the target, and those 2 points back and forth. But stuff like this happens where you miss out on half the trade. It is what it is. It's part of trading. That's just unlucky. There is, even if you trade ICT, there is some inherent luck to trading regardless. Like, you can place your take profit, you can place your stop loss, and they can hit it before you move your stop loss, all that kind of stuff. That's all, for the most part, luck, if you believe in it. It's just, as long as you associate some of your trading to luck, then it eases some of that mental tax. Anyways, so sell side bag there, put in new low around time, and now we're trading off of that. That most likely would have stopped a lot of people out here to stop trim there or trim there. But see, this is what I mean when we close. See how there's a market maker sell model here. When we wick the sell side and we close above it like this, like how we did with the AM low, right? When we came down and wicked this is the kind of price action I'm scared about. So the fact that we just wicked it and we slowly were trading through, I'm very, very hesitant. I got my finger over the trigger, ready to exit market and close. But see how we wicked it here, and then we aggressively trade through the market structure shift and the breaker. We didn't get that over here. It was kind of lethargic, just moving. That's why I didn't manually close it. But something like this, sell side pierced, and then boom, you have one candle basically closing all the way through this inefficiency, indication of reversal. So those little things that you can get good at tape reading are very, very important. But to be honest, if you can avoid the 1 minute just from the jump, I think it's easier. And then if you go down into the 1 minute, it's better. I've just been tape reading. If I had to go back and do it again, I would not even look at the 1 minute. I think the 3 minute and the 5 minute are just better. But now using the 1 minute and going through it over and over and over again, as long as you understand that on a 1 minute chart, there's going to be more fluctuations and you have to sit through something like this. But on the 5 minute, it's only 3 candles. As long as you're comfortable with that, it's just better. I am better. Sorry. Honestly, for me, understanding how RSI worked took longer than ICT because it made no sense. I know. All those indicate. I mean, ICT, like I used to use those indicators. I used to use MACD with a strength momentum and 2 EMAs. And that was my setup. And then as soon as I found ICT and it's like, yeah, all that is BS. It's just all of this, all these candles. And he was showing it day in and day out with the 2022 mentorship. I was hooked by like day 2. But I am thankful for that time because now it's like everything that I used to know, I kind of use against myself. Like looking at this as a bull flag, know that there's a lot of low resistance liquidity below there. All that's good stuff. But even on a day like today where miss out on profits, it's more about pegging your confidence on the execution than on the profit and loss. So yeah, you missed out on, or I missed out on some profit there, 20 points worth of profit, but keeping risk managed and not taking a loss on a trade like this is more important to me. This is where you could get an internal stop run and it continues down to the gap, but we're at 10:30 now, so it's not super important. Yeah, thinking like dumb money and do the opposite is a cheat code. That's why I think the people who come from retail and then go into ICT concepts do the best. If you just learn ICT, it's a little bit more difficult unless you actually take, not courses, but you watch videos of what retail concepts look like. Then you can get a little bit better. But that'll wrap up the week. Watch this breaker in here too. A lot of annotations today. But hopefully it shows you time, importance of time, and waiting for a setup. Got, I don't know, how many setups did form this week? I think there was a setup every day this week using the 2022. I only took 3, I think, or 4. I think I took one Monday, Tuesday, Thursday, Friday, so 4. Definitely a higher week, but there was a setup still on Wednesday, a little bit choppier than normal, but I mean, I'm not going to say the ATM model is the best. I'm just saying if you were struggling in finding one that works and one that happens every day, and then it gives you the confidence that you don't have to trade every day either, just look into it because I think it's well worth your time. But for me personally, that was just something that I needed to make to build my own confidence up. That's why originally it was the 930 model. If you were in the Discord, but I don't know, probably like all the way in December, I want to say. If you go to models and reviews and scroll up, there's a 930 model there. But even for my own preference, I didn't like how long some of those trade setups were and how inconsistent they could be. So developing this, and for some people this isn't going to work, but developing your own model that suits your trading style and your fears are super important. So if you can go in on the weekend and write down basically what you're afraid of. So if you're constantly blowing accounts, or if you're constantly, by the way, this will be more psychology based, so I'm done tape reading. If you want to leave, feel free to. I'll see you on Monday or Tuesday. But anyways, if you can go in and write down, this is what I'm scared of. You do some serious self-reflection of, I am worried that I won't pass my account because, you know, XYZ. Maybe I'm not going to find a setup, or I'm not going to, I want to rush to pass this account because I want to get my first payout. All that stuff, there's normally an underlying cause. And then that creates some sort of emotion that you react to. So it kind of goes like, I drew this out yesterday actually in my journal, but you have a thought, right? So your impulsiveness always stems from a thought, and then you have either you have an idea that stems from it, then button pushing, and in between there, as soon as you get the thought of, oh, I'm going to push the button, or I'm going to do something that I shouldn't be doing, you have to create some resistance to it. So from here, you get resistance, and that resistance is uncomfortable. If you can sit through the uncomfortability, that is where you get discipline. If you can't, and you sit in that uncomfortable state for too long, then you push the button. Like this was too long for me, or then I close it out, ran out south side. So what you can do to avoid being uncomfortable for too long is you have to do something. There has to be an action phase. If you sit in that thought of, okay, here's a trade setup that's outside of my model, I'm going to push the button, or you have an idea, a thought where I'm going to push the button, but there's that split second where, should I be doing this? If you can prolong that should I be doing this like stage, then you develop discipline. So within that uncomfortable area where it feels like you're questioning your thought, you have to create resistance. So either that's by creating new thoughts or distractions. So either distracting yourself by walking away, or thinking, okay, this is why I shouldn't be doing that, that's why it's important if you have a journal or something next to you and you have these not affirming statements, but statements that will help you. Basically, it's called injecting logic. So for me, I have a couple here. Like, one is mistake tilt. So hating mistakes is like hating to learn and improve. If I learn, the money is an investment for a better edge. You can always get better. And there's another one for, lacking confidence or hating to lose. So hating to lose is like understand variance is part of the game. Trust the system to produce profits in the long term and not the short term. So if you have these written down, that will create new thoughts that will flood your mind. And as long as you're not thinking about fear or you're not thinking about pushing the button, your mind is very, very powerful. And as long as you're thinking for something for a long time, normally it comes to fruition. So if you can kind of throw those injecting logics in to avoid thinking either down on yourself or being undisciplined, then it'll help. And then obviously there's preventative measures. Can't speak. Like walking away, turning off your charts, things like that. That's a little bit more hard. And then after that, you got regret and learning. So if you end up doing something that's stupid, at least learn from your mistake and hopefully journal it, figure out why you didn't follow. What was the mental map that led you to take that decision? Because the worst thing you can do is break your rules and then go into your journal and just be like, oh, I'm not going to journal it. That one's too uncomfortable. I'm not going to look at that screenshot. I'm not going to type it out. And that's the area where you normally will improve the most, is by looking at your failures. Hey, Flux, just wanted to say that since joining your Discord since late March, seen insane improvements. Nice. All previous platform accounts I used to run into straight drawdown, never was successful. But ever since I started learning from you, now closing in on passing 450K accounts. Nice. Slow and steady. That's great, man. 379 on each of them? That's crazy. That's the most important thing. I think if you can learn psychology out of this over anything, it'll serve you well in the long run. Price action reading and all that stuff is secondary. Yeah, W week. I agree. We'll go ahead and wrap it up there. I don't see it taking out this low again between the range. We could come back up and fill that gap. So hopefully it was a solid week. I do have a video on, I don't have a personal video on psychology, but this video by CJ Trades is top tier. So if you have time, it's only like 30 minutes. You can probably watch it on 1.5 speed, but that video is excellent. I'll try and put out the poll today. I'll either record, well, I mean, we're going to do a backtesting stream anyways. That'll most likely be on Sunday or Monday. So I'll put the poll out, vote on it if you get the chance, and then I'll try and produce that market maker model video by probably Monday latest. So enjoy your weekend. Get outside if it's warm. Relax. Spend some time away from the charts. Journal, whatever you need to do. But refresh for Monday and Tuesday. Appreciate you guys joining these. It means a lot to me. Helps me get better as well. So until I see you guys next week, stay safe, and I will see you guys then. Peace.